Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to this Thursday, March 21st, 2024 edition of the AICPA Town Hall. My name is Michael Cerami and I'll be one of your hosts for today. I know we're basically in the throes of a very busy season right now for many of you. So we're glad you can join us here today. And we think we've got a lot of great content to share, useful content for you. So before we get started, I'd like to just introduce, we have another quality lineup for you here today. Joining me this afternoon will be Mark Peterson, AICPA EVP, to talk about governmental affairs and provide us with an update. There's a lot happening in that area. Our old friend Lisa Simpson is back with a great segment on technical updates. And then Lisa is going to be joined by Carl Peterson, VP of Small Firm Services here at AICPA. And they'll both be joined by two tax practitioners who are going through what many of you are going through right now, and we'll be adding their perspectives on this tax season. So you're going to want to stay tuned. That's going to be a really, really great interactive segment with them. So let's go ahead and kind of jump in real quickly here. So Mark, I'd like to go ahead and welcome you in. How you doing, Mark?
Great to be here. Great to be here, Michael.
Well, thanks, Mark. I like to joke that you are the proverbial duck on a pond. We know you're always very calm and collected on top of the water, but there's a lot going on. So again, we find ourselves here facing a potential government shutdown, but it seems like maybe this will be averted again. So why don't you go ahead and take it from there?
Sure. I kind of feel like these town halls have been planned the day before a shutdown the last 6 times we've had this discussion, Michael. So they call the legislative process making sausage for a reason, and it's not pretty. But this morning at 3 a.m., the text came out of the remaining appropriation bills to keep the government funded. The deadline for the government to shut down is midnight tomorrow night, Friday night. So the remaining bills did include Treasury and the IRS. So again, the hopes is that these will all get passed through the House and through the Senate, and then we'll avert a shutdown. But let me give you a little context. So what Speaker Johnson had promised, actually, and part of his platform for running for Speaker was that legislative text would be out for 72 hours in order to provide transparency and to give members an opportunity to read it. They're going to actually break that promise to move quickly to get this done to avert the shutdown. So that's the good news. The remaining bills are out. People are going through them. They are slated to be up tomorrow on the House floor under an expedited procedure called suspension of the rules, which limits the debate. There are no amendments that are allowed, and it requires a 2/3 votes, a supermajority, 290 votes versus 218. We anticipate they're going to get it, and this is going to get done tomorrow in the House of Representatives. Then it'll go to the Senate. The Senate's process is very different, and in order to move quickly in the Senate, they basically have to do that through unanimous consent, which means no one can object. So there are going to be some members that are going to want to offer amendments to this. They'll have to work through that. Maybe they will allow a limited number of amendments. Maybe they will allow a limited number of debate. But they're going to have to restrict that in order to make the deadline. It's possible, if not likely, that is going to creep into the weekend. So what we could see is a shutdown, maybe 24 hours into the weekend. We do not anticipate a long shutdown, making it past Saturday. They're heading into a congressional recess, Michael, and they all want to get home for the holidays. And so we anticipate this is going to get done. Short shutdown over a weekend is not going to have a significant impact. That's what we're betting on right now. Things could go south, but we think that's the way it's going to play out.
Great, Mark. So just handicapping it, best case, tomorrow this wraps up, maybe slips into the weekend partially, otherwise early next week. It seems like that's how it's going to track.
Yep, no significant impact on IRS services.
Great. Well, Mark, let's go ahead and pivot to what I know, is top of mind for a lot of listeners here is the proposed Wyden-Smith tax bill. Again, I know there's been a lot of anxiety and noise in the system around that, but I would imagine as we keep pushing forward here, the likelihood becomes less and less. But why don't you go ahead and take us through that?
Yeah, so as we've talked about in the past, the two big chunks of this are the child tax credit, and then some of the business provisions like 174. And so made it out of the House of Representatives, overwhelming vote. Okay, so it's sitting in the Senate waiting to be considered. Obviously, practitioners are not thrilled with the idea of significant tax bill in the middle of tax season. And we've even got requests for, well, if this passes, would the IRS extend the dates? I don't think that's likely. I also think that the odds of this passing if it passes, before the end of tax season are unlikely. So where it sits right now is it is losing steam, is the way I would put it, Michael. Each day that goes by, it gets closer to the election. Election politics take over. People start to bet on whether they would rather have the gavel if political fortune is in the future for them than vote on a package right now. Having said that, Chairman Wyden, chairman of the Senate Finance Committee and one of the sponsors of the bill, continues to say that he's going to work hard. Overwhelming vote in the House. He's got to get 9 Republican senators to join them to make the 60 votes that they need to get it off of the Senate floor. And so he's continued to work on it. So I would say it's possible, but it is losing steam. And I think that each day that goes by, the odds become less likely. The other element of this, Michael, that gets a lot of attention is what pays for it, and that is the shutting down early of the ERC program. That does raise $74 billion in revenue that would be used to fund the other provisions. And again, we know that there's a lot of interest in that in the town hall community. I will tell you this: even if this bill doesn't happen, there's going to be a focus on the ERC program. The IRS has identified a ton of fraud involved in the program. As a matter of fact, Chairman Smith of the House Ways and Means Committee just put out a press release today that talked about a convicted felon in California who fraudulently made $550 million worth of ERC claims from incarceration. So stories like that are not helping, Michael. So even if it doesn't make it in this package, it's going to get addressed somewhere else, and they may use that revenue to fund other priorities.
Great. Thank you, Mark. Again, lots happening. I think, our position's been for firms to go ahead and file. And
yes,
I know Lisa's going to get into that a little bit later, talking to our practitioners as well. So a little bit more on that to come. So I also know, Mark, the President Biden delivered his fiscal year 2025 budget proposal this week.
Yeah, $7.3 trillion. So under it's a big number. Under the Congressional Budget Act of 74, we were supposed to have seen it on February 5th, but actually we just saw it on the 11th. It's really a roadmap. Obviously, this would have to go through the congressional process, and both the House of Representatives and the Senate will go through not only appropriations process, but the revenue side too, Ways and Means and Finance. But it does lay out a groundwork of where we could see a blueprint from this administration. Again, depending on the election, they may have another 4 years to execute on this. And, some issues focused on corporate and high income individuals, funding of the IRS, which is an issue that's important to us, as well as the functioning of the IRS. And again, child tax credits. There's several other initiatives that we've seen before in previous Biden budgets that we see in this one. Still has a lot of process to go before any of these become law, but it does give us kind of a guide path of where the initiatives will be, and depending on the outcome of the election, where the policymakers will start.
Great. Thanks, Mark. And then lastly, just some pushback. Well, I guess, actually it's coming from both sides, but really on the SEC, the recent disclosures on climate. So a lot of activity on that front.
Yeah, not unexpected. It took longer than we thought it would be, but not unexpected. It did pass out of the SEC a final mandate around climate disclosures. It was a partisan vote, the 3 Democrat commissioners versus the 2 Republicans. and not unexpected, there were immediately lawsuits that were filed. So 10 AGs have already filed suits. There's suits that are in five of the circuits right now. Actually, the Fifth Circuit has succeeded in getting an administrative stay related to these disclosures. So this is going to work out in the courts. We knew this was going to happen. We've talked about this in the past. We anticipated it. And you're right. The U.S. Chamber of Commerce sued because of overreach, and the Sierra Club sued because they hadn't gone far enough related to what's considered Scope 3, which gets into the supply chain and chains and hits the smaller businesses. So there's going to be a lot of noise around this, whether it be legal noise or political noise. Having said that, Michael, California's moved forward. So a lot of large companies that have, are doing business in California are moving forward with how they're going to manage these disclosures. And then if you're a multinational, you have the requirements coming out of the EU as well. So the market is also driving some of this, of companies that are trying to just get ahead of it, while all of this noise continues politically and legally.
Great, Mark. And I know Lisa's going to get into it a little bit in her segment, just talking about we're continuing to produce resources that provide guidance out to the membership. So
Absolutely.
It's a lot there, Mark. We know you and the team are working hard to keep all this current. I know there's a lot of comments, as you might imagine, in the chat relative to all of the governmental affairs stuff. I will bring you in later in open forum and ask some questions. I'll be sure to filter some of those first before I go ahead and pose them. But thanks, Mark. We'll see you in a little bit. And I'd like to go ahead and welcome in Lisa Simpson.
Hey, Michael. How are you?
Good. Welcome. And I'm going to go ahead and turn us over to you.
All right. We'll see if we can keep everybody fired up. Well, this is one that's always going to fire people up. It's beneficial ownership information reporting. I'll start with the reminder, like I always do, in case we have new people joining our town hall community. And beneficial ownership information reporting came out of legislation called the Corporate Transparency Act. And this act basically is an anti-money laundering effort that mirrors some activities, some filing requirements from international regulations as well. So the idea behind all of this is to try to track down and crack down on bad actors, people who are hiding money, standing behind shell companies and things like that. As a reminder, if you have an existing company as of January 1, 2024, who is required to file, the filing requirement is that the report be done by January 1, 2025. Companies that are created new in 2024 have 90 days to file. So I tell you that because we do have some time unless you've got a new entity. Our suggestion is that if one of your clients has formed a new entity, that whoever walked them through the filing process should be also taking care of the BOI reporting. Big caveat, there are 23 exemptions around who should file. One of those that will impact a lot of entities in the U.S. is the large operating entity exemption. That's for folks who are entities that have more than 20 people in the U.S., report a gross revenue of over 5 million, and are physically present in the U.S. So that's going to scope out quite a few entities, but there's still an estimated 32 million small entities in the U.S. that will have to file under BOI if they have incorporated or filed formation certificates with the Secretary of State. The penalties are substantial for non-compliance. And we also recommend that you regularly look at that small entity compliance guide and FinCEN's FAQs because they're very helpful. After the last town hall, I think the day after the last town hall, there was some big news around beneficial ownership information reporting. I'm going to call it BOI because that's a lot to say. So if we look at the next slide, you'll see that on March 1st, a federal district court found that Corporate Transparency Act, the legislation that requires BOI, is unconstitutional. Now, this is a very narrow ruling. It only applies to the 62,000 entities who were members of the National Small Business Association on the date of the ruling. So only those plaintiffs are now exempt from filing BOI for the moment. As expected, on March 11th, FinCEN immediately appealed the court decision. FinCEN's position is that if you're a reporting company that is required to file, you should file. And as a reminder, like I said before, unless you're a new entity, you have until the end of the year to file. So we don't have to get all of this done during tax season. We can wait. We can see what happens with this appeal that FinCEN has filed. The court case is interesting because basically it says that the government had said that they had this ability to require BOI filing under several different provisions. They said Congress has the power to conduct foreign affairs, and remember, this is like very, very many international reporting requirements. They also have authority under their position via the Commerce Clause, and that this is a proper exercise of taxing power. I'm not going to touch that one because we've talked several times about how the fact that this is not a tax reporting. But the court rejected all three, and the court came back and said that the legislation could have been drafted in a way that would have made it constitutional, and that nothing would bar Congress from imposing these CTA-type disclosures through state filings if an entity starts doing business. They also said that they could have made this constitutional through their use of interstate commerce regulations, and they can go and specifically say that you can't hide money, you can't launder money, you can't defraud. And so basically the onus for now is back on FinCEN to go through the appeals process. So we'll keep you posted on any further developments. So I know that it's confusing, and I know that a lot of people are hearing, well, I just need to go join this NSBA and I can get out of filing BOI. That is not FinCEN's interpretation. The penalties are so substantial. I would not take a chance on joining the plaintiff entity and thinking that that's your cover. But there's a great podcast that Melanie Lauridsen, our VP of Tax Advocacy, recorded, and it's going to talk about a lot of the factors around BOI. So highly recommend that you listen to that one. And I also want to remind you about all of the great BOI resources that we have, including some resources made available through CNA, our professional liability insurance underwriter. You've got an engagement letter template and a risk alert that provides clarification around whether or not accounting firms are covered if they provide BOI services, and some good FAQs as well. So on the last town hall, I talked about and gave you an example of a form that one of your firm's clients had gotten in the mail that looks like a very official filing form. And it says, file this form out, give me all your information right now, pay me $117 and I'll do your filing for you. I'm going to ask that if you didn't catch that last segment, that you go back and watch, because I think it's really important that you're talking to your clients about what they might be getting in the mail, these solicitations that might be coming in that look very official and very scary. So I think that's BOI for us. And so we'll move on to our next favorite topic, which is employee retention credit. As a reminder, the Employee Retention Credit Voluntary Disclosure Program ends tomorrow. That is the one where basically taxpayers who've taken ERC and gotten the money can go in and file online and say, I want to give it back, but they only have to give back 80%. They do have to disclose who did the ERC filings for them. But again, that ends tomorrow. The withdrawal program is still available. That's for those employers who filed ERC and now are thinking about it and are like, well, maybe I shouldn't have taken it. These are ones who have not gotten their refund or they didn't catch the check, and they do have to withdraw the entire amended tax return. I know we are getting questions in the chat about the ERC moratorium. The IRS has not said when they will release the moratorium on their processing of ERC claims. We get lots of questions about, well, can I still file for ERC? Maybe I just got this client from another source and they're eligible, but the other source did not file for them. You can still file for ERC. However, as we talked about in Mark's segment, there is a potential that ERC is closed down as of January 1. So you need to talk with your clients about it and say, here's the risk. I can go ahead and file the return. Here's what that's going to take. And if legislation passes, there may be a retroactive cutoff date to January 31. There could also be a cutoff date in, April 30. We don't know what that legislation is going to look like. So again, it just requires a conversation with your client and documentation of that conversation. All right, so we've got BOI and ERC out of the way, our two favorites. Let's talk digital assets. If you've listened to us before, you know that the IRS is really focusing in on reporting of digital asset transactions. They've expanded the number of forms that have now a digital asset question, and they have recently updated their information around digital assets, including what I think is really important, guidance around when to answer yes on the tax reporting form. So check that page out. And also, I want to point out 3 digital asset podcasts that we have as part of our Tax Section Odyssey series. These are really important and really helpful. The first one was around questions and misconceptions. The second one was around how to calculate losses. And then the third one that just popped out today is around reporting requirements. So I know that more and more of your clients, if they're like my son, are probably getting into digital assets. You might be getting questions about it. So these 3 podcasts, I think, are going to be a really big help for you. And then let's see what's next. Okay, we've got a couple of tidbits of other IRS news. The one I really wanted to point out was that we're hearing from some practitioners that there are challenges around their eFINs being flagged as suspicious activity, and they might actually have to get a new eFIN to be able to process returns. So if that's happening to you, what we've been told by the IRS is to contact the help desk, and we've got the phone number there for you. The other is just another warning. It's tax season, scam season, and IRS criminal investigation units are warning about money mules that are basically trying to get money through the system in an illicit way. So that is our technical update. One more. This is an amazing podcast. I posted this on Twitter and LinkedIn, X and LinkedIn a couple of weeks ago, and it's still going to be relevant for you. It is about how to file an extension that protects the ability to file a superseded return. This is a really great podcast. I don't get a commission off of downloads of the podcast, I promise, but I learned a lot with this one, and I think it's really important for you to consider as we're approaching extension season. So I think that's it for our technical update, and now I'm excited to be joined by Carl Peterson, who you all know are our Vice President of Small Firm Advocacy, and we have a couple of special guests, Gary Wood and Erin Roche. Erin Roche is, she's been on the town hall for us before. She is a partner, a tax partner in a private client services at BPM. BPM is a 1,300 person, primarily West Coast firm, but they have virtual offices all over the country. Erin is incredibly active in the profession and is currently a member of the PCPS Executive Committee. She's very active with the California State Society as well. Welcome, Erin. And then we have Gary Wood. Gary's been on the town hall with us before as well. Gary is a partner with CRC. It is a 12-person firm, so we got a good variety of firm sizes with us today. And what I love about talking with Gary is that he is really focused on business model and what makes the firm run most efficiently. And he runs what he calls a lifestyle firm. So looking for flat revenue and accidental growth, but really about building a firm that helps everyone in the firm live the lifestyle that they're looking for. So with that, thank you both for joining us. And Carl, I'm going to let you kick off the conversation.
All right. Sounds good. I appreciate it. Erin and Gary, it's great to see you. And Erin, I think we need to make sure that we point out that You were originally part of a small firm, right? I don't
Yeah.
remember
Yes.
how many people there were there.
Gary and I were kind of tied. We were very similar. He and I met originally through a PCPS firm networking group, and he and I got to know each other because there were a lot of similarities between our firm sizes and how we operated. So yeah, it's been a transition for me, a learning experience for sure. It's interesting to see how things are different and how things are similar between the two models.
Yeah. So you bring some great insight. So as crazy as tax season has been over the last few seasons and few years, and with only 4 weeks left now in this tax season, how would you guys say this tax season has been going for your firm? Gary or Erin, either one.
Yeah, well, it's the second half, and so we're kind of learning that not only is tax season a season, but there's really two halves to the tax season. And we're here in Missouri, so home of the back-to-back Super Bowl champion Kansas City Chiefs. So if you find yourself at halftime behind a little bit, it's time to wake up like the Chiefs did in the Super Bowl and play the second half. So, but yeah, we study in our firm culture pace very closely, and so we think setting a pace is very important. And probably the most important thing about setting a pace is knowing the total output that you're trying to get. So just like trained runners, when they go out to run a long distance race, they know how many miles they're going to run. We think it's really important that you put a bookend on how much work you're going to accept in a busy season. Otherwise, your pace is going to be a little unmanageable.
So you did a lot of planning to get into this tax season with that pace concept and output. Has the season, have you been achieving what you want? Are you right on pace for, your plan?
Yeah, I think that's what we're learning this season is inherently for us, each time we've tried to set better pace, we've found that the second half of the season just has these inherent higher pace numbers because of the intake, just the life cycle of the 1040 job and how the work flows. And so that's something that we're focusing on each year even more, is how do we improve the pace of the first half of the season so that there's less of a fast pace in the second half of the season.
Yeah. Erin, I know
Yes.
you are connected with so many other young professionals as well, besides with Gary in your firm. How would you describe this season so far this year? And what have you been hearing?
I would say I would describe this season as our first return to what used to be considered normal, right? So being from California, we've had a number of things impact filing seasons for the last, I think I counted, and up here in Northern California, at least, we had 8 years running of material deadline impacts between various types of disasters. So to have a true 315 deadline was actually a little abnormal for us. So it's reacclimating to what a normal cadence of tax return deadlines is intended to be. And it went fairly well. We still have some curveballs in the pipeline with the pending legislation. So Lisa, I love that we have a podcast that addresses extensions as it pertains to superseded returns, because that was definitely a strategy that we leaned on with our 315 entities, because there is a potential, if legislation changes, that there could be some really big impacts to returns that would otherwise have been completed in the March timeframe. So we did a lot of protective extensions so that we maintain the ability to supersede filings rather than having to go through the full amended return process, which under BBA rules and all of that, having to do administrative adjustments on partnerships and stuff, it just gets complicated. So we're trying to save some strife for our clients by going through those protective extensions and then hopefully making life a little bit easier for ourselves down the road if the changes materialize. So right now, I'd say that things are going fairly well with the filing season. Pushing off and adding to some of the burden at 315 by doing extensions that, it's a little bit more activity. And we're still, like to Gary's point, keeping an eye on pace, keeping an eye on checklists, making sure that we're mindful of what's coming down the pipeline, and communicating with clients as soon as we see something coming so that there's no surprises.
Yeah. With 4 weeks left, how do you keep staff pumped up, excited, and engaged to make it through the next few weeks?
I would say similar concepts apply to staff as it does clients. Try to minimize surprises. So the more that we can keep communication lines open with the staff, make sure that we're coming at communications with encouragement, and making sure that team members of all levels know that they are not out on an island, that we're here to support them, and we are here as a team, and we're here to get things done together. I think that helps a lot. A lot of times tax preparers will get bogged down, and they think that they're in it alone, and just having those other people to, even if it's just for commiseration purposes, knowing that you are not on an island really helps keep the energy up, and helps us power through to the end.
What do you do, Gary? What do you guys do?
Yeah, I think like Lisa said, normally I'm invited to talk about more business model transformation and that kind of stuff. So when I was invited to talk on the tax segment, I said, I'll do my best, but we are each year through our revenue modeling, we are narrowing the amount of tax season compression. So one KPI that we monitor now in our model is zero. We strive for zero extensions. We have not yet hit that goal. So, but I keep hashtagging zero extension. I think it's going to be bigger than zero inbox someday, but not yet. But anyways, we because of our CAS models and because of our advisory models, we break up the year into what we call our 3 seasons framework. And so we actually intentionally set our firm on a fiscal year that runs May to April. And so not only are we ending tax season, but we're ending the end of our fiscal year. And so there is some motivation and inspiration that comes with just closing out a very successful year, not just a successful tax season, but a successful year. And so I think for our team, there's excitement about what we learned from the last service cycle, which was a full 12-month cycle, and looking forward to what we're going to implement for the next service cycle that's going to start in May. So it really is light at the end of the tunnel on a lot of things for us, not just tax season, but the light at the end of our fiscal year, as well as this inspiration for new ideas to come to implement and innovate in our new fiscal year.
Yeah, and you mentioned being a CAS practice. I think you're kind of primarily or forward first primarily being a CAS practice with a tax component, right? Tax practice component to it. As you evolved into that, what are some of the unique challenges that you have or advantages that maybe you have?
Yeah, I think
especially.
Yeah, I mean, I think it's so important. I mean, part of being in public practice, part of the attraction being a firm runner in public practice is the variety of work that you can do. And I think that's a blessing and a curse to a lot of practitioners out there, because you can end up being all things to everybody if you want to. And there's a certain pride that comes with that, a certain fulfillment that comes with that. But when you really choose your model and you set out to do it, one of the hardest parts is the boundary. Like I was talking about, the goal of setting pace is to know what your output is going to be and know what you're going to accept during tax season. And each year, as we've had to narrow what we've accepted as far as work during tax season, that's just been harder because you're saying goodbye to relationships that have been with you for a long time. And there's being from a small rural town, running a firm in my hometown, there's no doubt that there's humanizing emotions that come along with that. You rub shoulders with people on the school board that used to be clients and things like that. So, but I think the key there is, if you know in your heart, like Lisa said, we're trying to run a lifestyle firm, and so we're trying to do the higher value things year round for a smaller portfolio of clients. And if you really feel that in your heart and you really speak that out to people, I've never had anyone, shame me for choosing a model and going for it.
Yeah. Erin, we mentioned earlier, you merging into the larger firm from being a small firm. I'm curious. I'd like to hear your perspective on, there's so many small firm practitioners that are on this webinar today, or this session today. I'm sure you brought some phenomenal efficiencies and processes to the tax season, to the firm. What are some of those things that you feel you brought that they weren't necessarily doing, or, what did you also get from them to go, oh my gosh, this is a great idea. We should be doing this even in our small firm.
Yeah, absolutely. So I would say it's really interesting learning more about the different levels of firm model and how there is overlap and how there are some very significant differences. I remember a time in my career, when I was there with Gary and we're neck and neck and thinking like, oh, it really can't, like, it's all accounting, right? How different can it be? But really, there is some very big differences when you look at the way that flow happens through the process, right? So I would say one of the things that is a huge benefit in a small firm is your ability to be agile and to see things that are happening in the moment and be able to make a change very quickly if a pivot is needed. When you're dealing with a fewer number of humans, like, there's just less that it takes to be able to make that kind of pivot. The more humans you add into a process, the more that goes into that process. And at the same point in time, in a bigger firm, there are some really interesting resources that you have available that just don't scale down well. It's really difficult to have in-house resident experts in a variety of fields when you're only in a small firm. You're only going to use that person once every 2 years, versus like in a bigger firm model, that becomes something that happens frequently, and everybody pulls together. So it's easier to reach out and have access to those kind of tools, and not just in professional expertise, but also in some of the technology platforms that we have access to. There are a couple of things that we have here at the bigger firm that have been game changers, make it so much easier to be able to, assemble and then electronically deliver a tax return seamlessly to a client on a platform that then they're able to navigate really easily and pass out K1s. And there's a bunch of things there that from a small firm, we liked the idea of those things, but it didn't feel as practical because, you just didn't do as many of them. So the scaling factor wasn't there. One of the things that we have brought to the bigger firm that's working out really well, we're getting great feedback here. We're calling them client experience advocates. And these are paraprofessional type folks who would have traditionally been within the administrative department. And essentially what they are is they're kind of a go-between the professional staff and the clients. And their role is really to be like an expert instruction reader and a translator between, hey, the tax manager put out this list of things, like, what does that mean in English? So they've been helping our manager team really make sure that we're maintaining communication channels with clients and that things are being facilitated, that if clients have questions about technology platforms, there's somebody to walk them through that in detail without it being a huge time burden on the professional staff. It's really helped the flow of tax season keep moving and still make sure that we're delivering a really like high level white glove client experience. So that's been a really interesting thing to see develop here in the firm that hadn't existed before. So we'll see. It's in pilot phase right now. Again, like when you talk about big firms, it's all about scale. So we'll see how that scales up over the years. But it is exciting to see that developing.
Yeah, that's pretty cool. And Gary, I think with your staffing model, you guys leverage your admin or non-CPAs as well, don't you?
Yeah, it's the last 2 years, I would say, last 2 tax seasons. Similar to Erin, like, we actually came about it from just looking at other industries. Sometimes I think the CPAs, we live in a vacuum and we think we're the only ones with these unique problems. And like, we looked out towards like architectural firms and things like that use a title called project manager and things like, there's various different things that use project manager. And really what a lot of those titles are doing is similar to the client experience, that Erin is keeping things on schedule, making sure we're hitting deadlines, that kind of stuff. And yeah, specifically where we've seen the biggest improvement in, again, breaking up the tax season into two halves. In the first half of the season, when we studied our bottlenecks from past seasons, where we were experiencing bottlenecks in the first half of the season, it was in this phase of the life cycle that we call intake. There's always been, preparation and then review in the workflow, but we went a step before that and said, how does a job actually get the intake into the workflow? And our admin team has done a phenomenal job on managing the entire intake phase of that workflow, which has taken more of that CPA staff out of that. And they're just better at it through the digital intake, the digitization of that. One thing we did is we ditched the tax organizer. This is my 18th tax season, and unfortunately the best of breed tax softwares just aren't modernizing the tax organizer experience. So few years ago, we just ditched that entire experience and built our own more modernized tax organizer experience. It's all digitized, and our admins and admin team manages that entire workflow. And that's one thing that, similar to what Erin's talking about in that client experience, that I'm the most excited about for our tax season operations, is just ditching the tax organizer.
Interesting. Oh, that's cool. That's cool.
Carla, I remember a conversation we had with Carla McCall with AAF CPAs about using these client experience coordinators. I don't remember exactly what she calls them, but one of the things that stood out to me is it's very client service oriented. And her firm was finding that school teachers were really well positioned in this role, and very friendly, very outward oriented, and very organized. So we've got some resources that I'll talk about here in just a minute, but I wanted to get that specific example out there of the type of individual that might be a good fit for the role.
Cool. Well, maybe before we get to those resources real quick, do either of you have any kind of you all been there, right? You've been in the last 4 weeks, 3 weeks that's left of the season. Pressure is on, and you guys have really evolved. Any final recommendations you might have for practitioners that are listening today to make it through?
Go for it, Gary.
I'll say, to me, it's business model. Choose your business. Again, the variety of being a CPA in public practice right now is exciting because of the variety, but it can also be the thing that creates accepting too much work and having these, long sprints in the second half, where, the fact check for that is, if you do set a pace, you know the total population of jobs you're trying to get out, and you know how much capacity you have to get those out, and you set that pace, that daily, weekly pace number, and it's just unrealistic. You really have to take a hard look and say, I've just accepted too much work and I don't want to do that again. We're in the second half of the season. It's probably too hard to pivot that now and have those boundaries now without upset client relations and things like that. But just choose your hard. You're either going to have a hard decision to have another hard tax season, that's going to be hard, or it's going to be hard to change your business model as well. But either way, you're choosing your hard.
Yeah, very good.
So Gary, when we had our preliminary call, I'm going to quote what you said: say no.
Yeah, also, I think in that call we were also talking about there's a great marketplace out there to be a high volume tax factory, if that's what you want to be, and you can build your business model around that.
Right.
Certainly we didn't choose that path. We choose the CAS model, and then that's where our tax season gets narrow. And there will always be a tax season for our CAS service line clients. But the orphan 1040 work is narrowing each year after year as we grow the other side of that. But I'm excited for someone to go out there and, continue to build models around high volume tax factories too.
Yeah, I know in our conversation for our prep, we talked a little bit about making sure that you're choosing what you want to do, because choosing to keep everything is just choosing to prolong your own pain. And there's nothing wrong with setting a boundary, because it's very, very, very likely that just because it's not your favorite type of work doesn't mean that it isn't someone's favorite type of work. So having professional connections that you can, trade back and forth with is incredibly valuable, because it's a win-win situation. If you like doing business returns and you have a professional friend who prefers 1040s, like, great. Well, there's a symbiotic relationship right there. And both of you end up happier because you're getting to focus on things that you want to do. And to Gary's point, like, it really is difficult to make a change, but is it more difficult to make a change that happens once, or is it more difficult to perpetuate challenge year over year? So you kind of pay yourself some favors if you can take the time to invest in making some of those adjustments now versus just kind of going with where your practice takes you.
And for what it's worth, Erin and I, this is like a beautiful reunion because of how far we've both come in different paths. But when we were choosing our business model transformations, like, we were collaborating with each other through our PCPS networking group. And so not only choose your hard, but also find your tribe. And
yes,
so shout out to our tribe that I know is listening today.
Absolutely. They've been instrumental in my transition from tiny firm to giant firm. And we've also, gone through this process of, like, it's no longer my preferred something or other doesn't fit in my system. So guess who I went to first? The people that I've established a relationship with. And I know that is something that they would be thrilled to work on. So.
Very good.
I love it. Gary, can you talk to us just for a couple of minutes about the culture that you're creating where your team feels heard? Tell me a little bit more about that.
Yeah. So this is my 18th tax season. I had 10 years where I wasn't a firm runner and I was manager, and I had a lot of ideas as a manager at that first firm, and maybe too much, where I maybe offended some people with all my ideas. So I always told myself, when I run a firm, I want to be in the position where I'm offended by how many ideas that I get from my team. And so at the end of every tax season, which again memorializes the end of our fiscal year, so we do have a retreat, and courtesy of Tom Hood, we do management by sticky notes, and we take so people drop different ideas for improvement, continuous improvement throughout the tax season in a cloud-based spreadsheet, and then that all gets distilled down. And it's amazing what you can find through the exercise of management by sticky notes, where you can actually, there's really maybe 5 to 10 things. Like, when you distill it all down, there's really maybe 5. People are coming at it from different angles, but you can find some synergies in that. And so, yeah, I always want to be sure that we have a culture where all ideas are heard, and that's kind of when they get heard. And honestly, the sticky note approach gives it a little bit of for those that are less vocal, it gives them a way to plant an idea that they may not want to speak out at a boardroom type setting, and it allows them to drop that idea, and then we're able to kind of curate that idea in that setting. And then we just democratize what initiatives we're going to take in the upcoming year.
Carla, it reminds me of how you used to have a little line of Post-it notes on your monitor during tax season. So we have 1 minute left. Tell everybody about your slips on your monitor.
Oh my gosh. So during tax season, sticky notes, if a client sent an email or I got a phone call with a client and it caused me stress or anxiety, I'd write down on a sticky note who that was, when it was, and maybe a note about it, put it on our monitors, call it termination row. And at the end of the season, we'd pull every one of those off and say, oh, that was me. I was under pressure or whatever. Or if that client really caused the anxiety, it's like, you know what? You're out of here. So
that's funny. Carl, I didn't do it on my monitor, but I had a manila folder that I put sticky notes into last year because I'm a very organized, visually I need a clear space for my brain to function the way that it wants to. So I put it in a folder that I could close and put in my drawer if I didn't want to look at it, but it was there and I could organize it. So I'm with you. It's a great method.
Yeah. Yep.
So I mentioned that
in front of me. Go ahead. No, go ahead.
No, I was just going to say, I mentioned that we have some resources around part of the conversation that that we just had around client service teams. And so I want to make sure that we talk about those. And it's what we call our non-CPA workstream tool set. We worked with Convergence Coaching, who many of you know, and we've got some customizable tools and templates for you that'll help you work through what the position description is, what the actual roles and responsibilities are, and we've got a lot more in there for you for a limited time. If you're an AICPA member, you can access that, and then it will become a PCPS only resource. We also have, to help you close out tax season strong, we have our very popular busy season fun calendar that'll give you some ideas on how just to lighten the mood a little bit, take a deep breath, let's have some fun, let's find some silly game to play, just to blow off a little bit of the stress that can get us all at this busy time. So with that, Michael, I think we're open forum.
Yeah, that was just great, guys. You know, Erin, Gary, thank you. A lot of relatable feedback. The chat is kind of blowing up on us there. So just a great discussion with Carl and Lisa, and very timely and very relevant. We do have a couple of questions. So let's go ahead and do we have Mr. Peterson up too? Is he? Yeah, let's bring up Mark. So a couple of quick questions. We'll try to do this in round robin style. Mark, maybe I'll start with you. I believe you're the right person to direct this to. But just on the in the proposed bill, how would the child tax credit be affected for the most part?
Well, you know, Lisa, you should jump in as well. Yeah. There's a timing issue as related to that. That may be the reason that there's the questions coming in, Lisa, which is why if this doesn't get done quickly, the benefit of the child tax credit and the policy goals of it are not going to kick in. I don't know if there are other specifics.
Yeah, it was designed to increase the amount of refundability. Right. And so I think that was the main provision. And I think that's also been one of the main sticking points as well.
It has been.
The IRS has said that if this legislation passes in its current form and tax returns have already been filed, they'll go back and fix those. And I think for child tax credit, that may be easier than many of the business provisions. I don't think we can expect that the IRS can go back and change returns. I wouldn't want that.
Yeah, and the commissioner was pressed on that, Lisa, if you recall, at the hearing, the oversight hearing, and he said that they could handle it.
Yeah.
Lisa, quick follow-up on BOI too. It's just the whole unlicensed practice of law. Is there a single place that practitioners go to just see which states have maybe ruled one way or the other on it, or
it's all in my head, Michael. It's all in my head.
I didn't think so. That's
as of now, no states have made any determination that accountants getting involved in BOI filings is the unauthorized practice of law. There are some good resources. Look at that FAQ that we have on the AICPA website that's included in the slides. And there are some things that you might want to just think about. Keep referring to that FinCEN Small Business Entity Compliance Guide. It has great checklists that it'll just walk you through. So I think if you're sticking to that and not making a determination on what is a controlling entity, then for now we have no reason to believe that performing those services is BOI.
Got it. Hey, Gary, I think my favorite comment in the chat was maybe someone who said that you had them, it's the equivalent of you had them at hello when you said that you dropped the tax organizer. So there's a lot of love for your modernizing the tax organizer. Maybe the people are just asking maybe how you did that. If you could elaborate on that a little bit.
Yeah, I think the tax software companies, the incumbents that are in that space have just kind of postured that that's not really on their product roadmap to modernize, and maybe rightfully so. They got so much capital invested in the tax engine that they're looking for other third parties maybe someone through the startup accelerator for Casey, but these other products to plug in and fill that role. We are currently using our practice management software with a couple other third-party add-ons. So we're kind of pairing together a couple different applications. We use Carbon for practice management, and we're using Cognito Forms for the questionnaire that was usually put out through the tax software organizer. So we're kind of pairing those together to bootstrap our own tax organizer experience.
And Gary, just following up real quick on that, there was a question, kind of what was your motivation for being a zero extension firm? But I think part of it, I mean, knowing you fairly well, I mean, you really, you made a very intentional decision. The CAS is a very big part of your practice. I would imagine that, that kind of connects the story a little bit more, maybe why, you define this as you did on the front end. Well, I thought it was, people really appreciate hearing you say that you're very intentional about how you're running the practice. But maybe you could talk a little bit about, how the firm really has its roots in CAS and, why you made that decision.
Yeah, I mean, it's where there's no cookie cutter advice. I think you have to do your own self-assessment on what is the model that works for you. If you're someone who loves the high volume, high pace, tax work, high volume, low transaction type stuff, I think there's a great model out there to build around that with extensions. And probably the idea of moving of tax day and some of that is way more important to someone in that business model than it is in ours. We have been on this pursuit of the CAS service lines, and so we have to put a really hard bookend on how much work I actually, in my PCPS networking group, my Google Photos reminded me of when 4 years ago during COVID, when they extend the start of Marchternity for all of us. So I hate to bring PTSD back for my group was like, why do you do this to us? Why do you remind us of this? But it was a reminder to me that was a bad thing that was really bad for our firm. It could have been great for people that were, trying to build their revenue model around tax preparation revenues. It was just a really bad thing for us, because when we start our fiscal year in May, we're kicking off a lot of our advisory and CAS engagements. And so our capacity plan got really out of shift when things started shifting like that in tectonic shifts.
Well, great. And maybe final question, Erin, for you. People really appreciate hearing how you and Gary got to know each other so well through the PCPS networking groups that Lisa and Carl and the team lead. Maybe they really were asking for a little bit more of an understanding of how that works and how you came about getting involved, because I think people were really interested in that.
I'm going to have to say thank you to the PCPS team again, because I talked about this last time I was on town hall, and they got a flood of emails afterwards. It's one of the best kept secret resources of PCPS are these networking groups that AICPA facilitates for us. And really, the group that Gary and I were part of came about through the AICPA Edge conference that is now part of Engage. We were part of a community of young professionals that had all expressed hey, we'd love to have a group where we could bounce ideas off of each other and learn more about how other people are doing things. So our networking group came out of that, but there are a list of networking groups that have come about from PCPS members in general who have reached out to the PCPS team and said hey, same thing. Hey, I'd love to have a peer group that they're typically spread out throughout the nation. So you don't feel like you're in competition with anybody who's in your group, but it's a very safe space where you can come with your hey, I'm struggling with, or hey, I had this wild idea, help me work through how I make it happen, Gary. There's all these cool things that come about, and it's amazing to see the transformation of the firms who participate. There are groups available for all size firms, small to large, and there is a team of folks within PCPS who helps manage those. So within the PCPS resources, defer to Lisa exactly where that is on the website. But there should be information available on the PCPS website about how to get in contact with the team. if that's a resource that you'd be interested in. I know that we do try to keep those up and running, and as needed, new groups will form. So it's a great resource, great way to really understand more about your firm and make those big decisions in a supported environment.
Well, thank you, Erin and Gary in particular. Fantastic discussion. Your feedback was really well received. So thank you for joining us here today. Mark and Carl, always great. Great to have you on. And thank you guys for tackling the topics that you did. And I think we'll say goodbye to the panel. And I think Lisa and I are just close this out here real quick. So Lisa, we talked about, quite a bit about, the last town hall, we had Alex Doron, who talked a lot about just, managing through these very stressful times. We launched a digital CPA podcast series not too long ago, where we go a little bit deeper into some of the topics that we cover here in the town hall. So two great segments here. One, again, a follow-up with Alex, and then with Ron Quanta talking a little bit more about the surge in crypto and digital assets and what all that means. Also, we've got the balance of the year booked from a town hall scheduling standpoint. That you should all be auto enrolled for all of these. But this is the calendar. It'll be sent out in today's follow-up packet. And then again, next town hall, April 4th, followed by April 25th. Lisa, I'll give you final word.
Just hang in there. We'll keep you posted if anything big happens, but stay tuned and we'll see you in a couple weeks.
Wonderful. Thank you, everyone.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.